So before we really dive into what Boston Omaha does and what their SPAC is intended to do, can you just give listeners kind of a brief overview of what a SPAC is?
Sure. So, Matt, a SPAC is a special purpose acquisition company with an emphasis on the idea of acquisition. This is a company that comes to market via an IPO that you can buy into. It is formed for the express purpose of acquiring other companies. SPACs are a type of blank check company, and that makes it sort of easier to understand for me. I get the concept. I hear SPAC and it doesn't register anything, Matt. But I hear blank check company and I totally get the idea. Okay, this is a company that is given some funds by investors to go out and make acquisitions. Characteristics of blank check companies: they don't have detailed business plans when they file their S1 statement, their prospectus before going public. They don't have any operations. So one thing that I want everyone to understand here before I finish defining this is when you invest in a SPAC, this type of company that's going to then acquire other companies, you're actually not investing in a business concept so much as you are in a management team, the people who are bringing the idea to market. And it's sort of important to know who is offering up this SPAC and try to get an idea of how they might perform. So the company which is going to go public via this type of vehicle won't even have any stated acquisition targets when it goes public. So if you read through one of these prospectuses and try to find out, okay, what company does this special acquisition purpose vehicle want to buy? Most of the time that's not disclosed in the filing, but it doesn't mean that the people who are behind the SPAC haven't already identified targets. And that's critical to understand too. Many times you'll see a SPAC after it gets its funding go straight into an acquisition. And sometimes they take several months. So it takes a little bit of time often just to finish due diligence, for example, and we might not hear about that as investors. When these companies go public, the IPO proceeds are placed into a trust account that bears interest, and they have to close a deal within 2 years. If a SPAC doesn't identify and go through with an acquisition in that time frame, it's supposed to be liquidated, although there are certain ways you can extend that. But in general, once investors put their money in, the expectation is that the management team of the SPAC is going to go ahead and start acquiring companies. And so we'll get into some more specifics together on why on earth anyone would want to invest in something like this. I think there have been some successes this year and some not so great SPACs that have come out. So just flip it back to you, Matt, but that's a general overview explanation of what a SPAC is.
Yeah, so apparently some people do want to put money into these, right? Because just to run through a couple statistics, in the third quarter alone, 77 SPACs went public. That's 40% of all IPOs that we saw in the third quarter. Through mid-September, SPACs had raised over $31 billion on the public market. And I was just looking at my TD Ameritrade account. 3 are going public today. 2 more are going public tomorrow. So this is a continuous, fundraising vehicle. And there are, like you said, there have been some really notable examples. The one that I always give is Virgin Galactic, which went public through a SPAC. Open Door, the real estate startup, is about to go public through a SPAC. And there are a bunch of really good examples of where this has worked out.
Exactly. Yeah.
There have been one in electric cars recently. There was just one.
Yeah, Nikola is one, and
Nikola
they've
is
been a
one.
little up and down, but yeah, there have been some really successful ones. And I was curious. We didn't discuss this when we were chatting before this segment. I haven't been able to glean exactly why they've suddenly become as popular this year. They come in cyclical waves that are sometimes tied to the economy. Any insight by any chance on why they're so popular, since the middle of this year?
Well, it's a combination of a few things, I think. One, there's just been a big wave of IPOs in general.
Sure.
So companies are looking for ways to go public. And there are basically 3 ways you can go public. You can do a traditional IPO. You can do what's called a direct listing, where you just directly list your shares on an exchange, which cuts out some of the costs associated with IPOs. But the downside is you don't raise any additional capital when you do a direct listing. Slack is a great example of one that went public through a direct listing. Or the third way you can IPO is through by being acquired by one of these SPACs. So what happens in that case, the SPAC will acquire a company. The company will get the funding that the SPAC has. So if the SPAC raised $200 million, it gives it an injection of money, and without the costs and regulatory issues, a lot of them that are associated with their traditional IPO. So it's kind of the path of least resistance to going public while still being able to raise some capital. Is my opinion on that.
Yeah.
Someone just asked, what is the ticker for Boston Omaha and their SPAC? And we're going to get into the company in a second. But because I'm really bad about saying tickers on the air, let me go ahead. The ticker for Boston Omaha is BOMN, and their SPAC is called Yellowstone Acquisition Corp, and the ticker is YSACU. When SPACs IPO, they generally IPO in what they call units. A unit of a SPAC, which is what you would buy at Boston Omaha SPAC, consists of one common share and then a warrant to buy, or a portion of a warrant to buy another share at a predetermined price at a later date. So think of it as you're getting a combination of stock and options when you're buying into a SPAC. At some point, I want to say it's 52 days after going public, the SPAC will start trading separately in terms of shares and warrants. But for the time being, you will purchase a unit of the SPAC, which gives you not only a share, but the right to buy an additional half share in Boston Omaha's case at any time within 5 years, which could have tremendous upside.
Sure, absolutely. And we should mention too that for those of you who aren't as familiar with warrants, when you exercise the warrant, if you hold the unit, that's money that goes back into the company's coffers. So it's unlike, when options are traded or exercised, those are transactions between two parties. But the company gets the proceeds when you decide to exercise that warrant and pay whatever I'm going to call it a strike price. I don't think that's the right terminology for the warrant. But when you exercise the warrant.
Right. So if the company's doing well to the point where people want to exercise these warrants, it can give them a nice little capital injection gradually as they go.